It's 10 a.m. on Tuesday, July the 11th, and because it's a weekday, well, it's time to do business here on Business Morning. Good morning, Amini, John McQuarrie. Let's get right into it. The next 55 minutes promises to be an interesting one. We're beginning with the global oil prices, which edged higher on Tuesday, recouping some of the losses from the previous session, as traders focus on supply cuts by the world's biggest oil exporters, Saudi Arabia and Russia. And also there's the issue of a weaker dollar. Now, Brent crude futures rose 23 cents to $77.92 a barrel, while U.S. West Texas Intermediate crude was up 32 cents at $73.31 a barrel. Prices had eased 1% on Monday on higher expectations that further U.S. interest rate hikes are coming, and as investors booked profits after last week's 4.5% rise. Supply cuts by the world's biggest oil exporters, Saudi Arabia and Russia, set for August, helped to lift the benchmark prices, which were also supported as the U.S. dollar fell to a two-month low. A weaker dollar makes crude cheaper for holders of other currencies and often boosts oil demand. Well, central bank officials said that the United States Federal Reserve will likely need to raise interest rates further to bring down inflation. Markets took comfort from the indications that officials also think that the current monetary policy tightening cycle was getting close to an end. Grains now. Chicago corn futures lost ground on Tuesday after a weekly U.S. government report showed improvement in crop condition following rains in the Midwest grain belt, while soybeans ticked higher. Wheat prices rose for the first time in 4 sessions, led higher by concerns over the tightening global supplies. Wheat added 0.5% to $6.49 for a quarter of a bushel. Corn ratings improved to 55% in the good to excellent condition, and went from 51% last week, and above the average expectation in a survey for 53%. However, the rating is the worst for this time of the year since 2012, when droughts in the United States raised global crop prices. Just 51% of soybeans were in good to excellent condition as of Sunday, and that's up from 50% last week, but below analysts' expectations of 52%. Only 47% of the spring wheat crop was rated as good to excellent, and that's down from 48% a week ago, defying analysts' expectations for an improvement of 49%. Brazilian farmers have harvested through last Thursday 27% of the area planted for their second corn crop, agribusiness consultants Agrogol said, and this is up from 10% point from the previous week, but still lagging 2022 levels. Now, coming back to Nigeria now, let's see what's going on there. We're expecting inflation numbers next week, Monday, and Financial Derivatives Company Limited is projecting a 0.39% surge of inflation in June. The company sees headline inflation hit 22.8% in June from 22.22%, with food inflation rising to 24.85%. That's supposed to be an 18-year high because of Eid al-Kabir celebration, a planting season effect. FDC says it's based its forecast on some key developments in June, such as the desegmentation of the forex market, which led to a 42.79% depreciation in the value of the naira at the I and E window to about 825 naira for a dollar. In addition, the exchange rate for computing import duty was adjusted by 40% to 589 naira 45 kobo for a dollar, from 422 naira 30 kobo for a dollar. And this is expected to push up the prices of commodities with import content. Already, the price of flour has increased by 5%, while the impact on other commodities will be more pronounced this month, July. Still here in Nigeria, the federal government is asking the organized private sector to prioritize the non-oil sector of the economy in order to grow Nigeria's foreign exchange inflows. This position was canvassed by the executive director of the Nigeria Export Promotion Council, Mr. Ezra Yakusak, at a conference in Abuja on trade and non-oil export. It was organized by the Nigeria Employers Consultative Association.
Around the development of Nigeria's non-oil sector have continued to lead discussions at fora where the economy of the country is the subject. This is also the crux of the discussions at the summit, as members of the Nigeria Employers Consultative Association meet to brainstorm on the topic, trade and non-oil economy, changing the narrative for rapid national development. The consensus here is that the federal government needs to deliberately plan to unlock the economic potentials of the country's non-oil sector.
Today, our focus and our attention is on the imperative of increasing trade and non-oil export. We have a new government in place. It's apt. Some will wonder why we're holding this event when we yet do not have the full cabinet, as it were, in place. But we're also conscious of the fact that soon after they get into office, we do not want them to start opening old books, but want them to start with new things and get challenged with new demands.
The keynote speaker, Dr. Akinwumi Adesina, is represented by the Country Director General of the African Development Bank, Mr. Lamin Barrow. He underscores the importance of mobilizing the private sector to build regional infrastructure and promote regional trade to boost exports.
Promoting trade and regional integration offers another great opportunity to further diversify the Nigerian economy. So to remove the barriers to non-oil trade and exports, Nigeria must decisively fix its power sector once and for all.
However, the executive director of the Nigeria Export Promotion Council is tasking the private sector to focus on non-oil exports.
I want to appeal to the private sector. I want to appeal to you. In as much as we advise you, in as much as we are trying to create an enabling environment for you to export, please stop exporting jobs. You export jobs when you export raw commodities. If we are serious about this, the private sector, I'm asking you now, please, you need to add value on our products.
Developing the country's non-oil sector has been a major thrust of the economic blueprints of successive governments. And although Nigeria's non-oil exports have had some growth in recent years, experts are looking to see that the growth translates to more foreign exchange inflow for the country.
Obviously, Nigeria really needs that foreign exchange inflow, and we do hope that all these efforts and policy changes and adjustments will bring that positive change that we need. We had some good news yesterday, which was the total capital importation into the country for the first quarter. Well, some people might decide to report the drop that was year on year for first quarter of 2023 compared to first quarter of 2022, which was down from $1.13 million to it was $1.57 million, and then it was $1.3 million, indicating a 28% drop. But we just look at some other good news. Quarter to quarter, I mean, look very good. Well, comparing the preceding quarter, capital importation rose by 6.78% from $1.06 million in quarter 4 of 2022 And the largest capital importation during the period was received from the portfolio investment, which accounted for almost 60%, 57.32%. That's about $649 million of total capital importation into the country in the first quarter of this year. And this was followed by other investment, obviously 38.31, and the foreign direct investment as the FDI, which we've been shouting about, yes, 4.20. So, I mean, it looked interesting and gave a bit of hope. And it seems that it came, you know, with the election, in spite of the election, and then the new administration, foreign investors in this case, seem to be building more confidence in the country as a destination for their monies and investments. But let's delve into this and a whole lot more with Dumebi Oluwole. She's a senior analyst with Financial Derivatives Company. Dumebi, good morning.
Good morning.
So, I mean, for a change, having this, I think yesterday gave us a little bit of breath of air, even though we've been seeing signs of this, especially when the president talked about unification, the hope of interest rate. Of course, we're still waiting for that, you know, but we've seen investors locally react positively to this. But I mean, I didn't know that it will start, because this is for the first quarter, that's January, February, March. Election was in February, March. So that means even before the results of the election, investors had already started building confidence, you know, in the country.
Well, I mean, looking at the trend of investment inflows into the country just for the first half of the year, we can somewhat say that, you know, we're seeing some level of confidence build back into the Nigerian economy. Reasons best known to the investors, but a few things, you know, we've seen happen that would have triggered this increase in terms of foreign investments. But what we like to look at is the mix of foreign investment that is coming into the country and what we can really do with it. Remember, during the election period and even almost through the first quarter of the year, the NGX actually has done really well, coming from Q4 into Q1 2023. And when we look at the inflows of foreign investments that have come into the country, the top is still foreign portfolio investments. And foreign portfolio investors have flocked a lot into the stock market. So when we really look at how much inflows are coming into the country that the economy would really benefit from in terms of the multiplier effects and hard cash that the government can use to produce or provide rather the infrastructure that we need to then uplift people and then, you know, improve productivity and then, you know, lead to economic growth or even capital formation, then that's where we now start looking at the other forms of inflows that would have been much more beneficial. And the reason why I say this is because FPIs, like we already know, is hot money, right? Quick money, quick to come in. Yes, quick.
Maybe even as we speak, it's already out.
So yeah, but that's how it really works. And for foreign portfolio investments are usually in equities, bonds, you know, things that have short term, that lost only for a short term, and they're just easy to quickly cash their money, you know, back out of the economy. And we know the issues that foreign investors have actually had over time, and the issue has been that it's easy to bring their money into Nigeria, but it has been difficult for them to get their money out. So that's why we've been having a lot of forex backlogs, and that's why we've had issues with the foreign exchange, you know, market and everything. But right now, with, you know, the latest reforms, we will definitely see, you know, more news, like in terms of an uptick in investments into the country, particularly FPIs. And we've seen this happen already. Between May and April, we saw an increase of over 100% of foreign portfolio investments into the stock market and things like that.
Yeah, I mean, I think the stock market grew quarter on quarter, more than 4,000%. That's mind blowing.
Yes,
but I mean, you just douse that excitement by saying, "Oh, remember, this is hot money."
Yes,
it might already be out even as we speak. But I think the equities is still looking really good.
Yes, it is. And one of the things that we like to point policymakers to is the risk of this quickly turning into an asset bubble. Right now, this happened in Asia. in the 1990s, right, when that now became the 1997 Asia financial crisis. What happened was that they had a huge influx of foreign investment, and most of the investment is Southeast Asian countries now, and most of these foreign investments came in the form of foreign portfolio investments. And because of the underlying economic issues that these countries had, particularly Thailand, because of the underlying economic issues that they had, the structure was still bad. Their financial markets were still very much fragmented. It was not strong enough. Financial institutions were weak. They were running current account deficits in the billions. And foreign portfolio investors eventually priced in a lot of these risks and began to pull out their funds. And what really triggered it was the devaluation of their currency.
Wow, sounds very familiar.
Exactly my point. So not saying that that's what's going to happen to Nigeria, but there are potential risks of this happening because we have started treading the path of economic reforms, which is very fantastic, if I must add. But our creditors, investors, and the global economy would still be looking for, number one, a follow-through on these economic reforms that we've started treading on. Number two, shielding people from the short-term impact of these reforms. Number three, sticking to the social contract that the government has with the people. Why? Because we've already started these reforms. They are painful reforms, and people, the masses, are the ones taking the blows, taking the painful jabs. But the bright spot is that in the short term, yes, you will feel very painful. Yes, it's happening, but in the long term, medium term, we're looking like in the next 2, 3, 5 years, the expectation that the benefits from these reforms will begin to, we'll begin to see the benefit of these reforms taking effect on people. Our GDP per capita should begin to increase. People should start getting more income, things like that. But the caveat there is, if people are receiving these jabs, and we're not seeing the money that we're spending come back into the economy in terms of good roads, good lights, good, enough fuel, things like that, and things are still getting worse, that social contract is beginning to get breached. And then we could now start having the risk of all of these things happening, where an asset bubble comes in, because investors are looking at all of this. Credit rating agencies are looking at all of this. How well can the government manage these reforms that they've started putting in place? How well can they begin to uplift people from poverty? How long in between? I mean, we have all been feeling it. Yes. The price of petrol spilling over to the price of food and all of that. We've heard promises of palliatives. We haven't seen it yet. It's a month since the subsidy regime has been halted. People would like to know, how much has the government saved within that month? What are you using it for? Because these are some of the ways, as you said, the government can keep to that social contract and continue to win the confidence of the people. So, we're getting hit on this side is because of this. We will see this, maybe in the nearest future. Timelines, would really do it. And of course, investors are also following the conversation. It builds their confidence. But how long, from the Asian example that you brought in, how long was the time lag on the average that the people should start expecting to feel some of the relief? Well, going back to the Asian example, the financial crisis actually lasted for about 2 years. So
no, not in Nigeria. No, not in Nigeria, no.
Yeah, so it started late 1997, I think about July 1997, and then, continued up until 1998, and it began to, the economy began to uplift around late 1998 into 1999, and most of these countries eventually started, they subscribed to the IMF's reform packages, which is somewhat like the conditions Nigeria is going on with now. We have to remove subsidies, strengthen your financial markets, strengthen institutions, government institutions, ensure they are more prudent, so things like that. So essentially, they subscribed to that package, and eventually, things began to, get better for the economy. So we're looking at, so in the short term is more of like 3 months to to a year, 2 years. So that's exactly what this looks like. And it depends, like I said, it depends on how quickly the government is able to stick to this social contract, start averting some of the impending economic risks that Nigeria has, that investors are already looking at, and then begin to bring in their confidence. Because really, the Nigerian government is not generating as much revenue as it should to be able to meet up with the needs of the economy. So what we need is foreign money to help meet up with the needs of the economy. And this foreign money is going to definitely come from our creditors, come from foreign investors. And like the concern we're having before we entered into like the hot money bubble and all of that is the mix of capital inflows that Nigeria is getting. We need to start attracting more foreign direct investments. Why? Because those are more long-term.
Not just portfolio investments,
yes. Not just portfolio investments. So we need to start attracting more foreign direct investments. Why? Because these are more long-term. So think of like a company, a multinational company setting up shop in Nigeria. They will, take a lot of, they will spend a lot of time to build. They will employ people. There'll be knowledge transfer. People can learn. There'll be employment opportunities that would last long enough, for people to start,
and they can't just up and leave if something, if they smell something going wrong.
Exactly, and that's where the use of our special economic zones come in. Back to what Asian countries did as far back as 1970s, the 1980s. Countries like Malaysia, Indonesia, and China as well, they really did take advantage of special economic zones. So special economic zones, you have export processing zones there, you have free trade zones, and Nigeria has a lot of all of these special economic zones. And the incentives are pretty much the same like Asian countries used years back to attract foreign investors into their country. What we just need to do is ensure that we attract the right kind of foreign direct investment into the country. That's number one. Number two, we need to ensure that bottlenecks, like I said, these economic and business risks are averted. So things like the port congestion, we need to make sure things like that are averted. One of the major issues that some of these investors that are currently present in Nigeria's special economic zones is forex liquidity. Thankfully, we've desegmented. We have collapsed our multiple exchange rate system, and that has, boosted confidence somewhat. We're seeing the naira trade close to the black market and even higher than the black market rate. So the Bank of America is even saying that Nigeria's currency now is undervalued from being overvalued. So and it's still a managed float, actually, not a free floating.
Yeah, I don't think any country would really allow its
their currency to float. Yes, so this is a managed float system. So we'll definitely see some level of interventions still coming in, but the expectation is that forex supply, begins to increase over time, and the naira begins to, trade at the band that the federal government is even looking at, and other, international agencies have already projected between 600 to 650. So eventually we'll see all of the noise in the forex market settle, the dust will eventually settle, and the naira, settles around that band.
Maybe thank you so much for bringing in that Asian example. It's always good to know that we can learn from somewhere.
Yeah.
But we also have inflation. When I saw the projection from FDC, headline inflation at 22.8, just food inflation, I was expecting the whole inflation to hit at 30%, because I know what we saw in June. You know what I'm saying? Yes. The subsidy removed and everything just went skyrocketed up there. Why does it seem like it's still 20? We're on 22.22 now.
Yes.
Going to 22.8 for headline. Only food is hitting 24.8 according to your projection. That's FDC.
Yeah, I mean, we need to look at, there's the impact of base effects here, looking at what inflation was last year in June and what it is today. So that base effect will definitely play into what the headline inflation is going to be, because we're coming from a year ago. The important things to look at when we're looking at the inflation basket itself, or the inflation numbers, are the month-on-month inflation, to see because month-on-month inflation truly reflects what is happening today compared to a month ago. So that tells us how fast prices have have increased between May and June. And we see that from the projection, month-on-month inflation is definitely going to increase a lot more. Core inflation, which covers, some of the energy prices and all of that, is also increasing at a very rapid pace. But food inflation, the reason why food inflation is moving that much is because there are a lot of other things that affect food prices aside the structural problems affecting Nigeria's agricultural space, right, agricultural industry. So we already know things like, for a commodity like tomato, there was a pest disease that that caught almost that caused over 50% of Nigeria's tomato harvest within this period, and there was also the planting season as well that came into play, and then there was now the festive season demand as well that had a minimal impact on tomato prices. So those are the things. So some of these structural issues are still there. Insecurity is still a big deal. We've seen farmers come out again to say they're still having issues planting and even harvesting their crops. So these structural issues are still affecting prices. They haven't stopped. They haven't gone anywhere. Then you now add
it'll only be
compounded by the issues like the recent increase in petrol prices that has increased the transportation of food across the country and even within the state. So that as well has increased. So we're seeing multiple impacts on multiple stoking factors on food prices. And for Nigeria's inflation basket, food alone contributes about 51% to our headline inflation. So really, we're seeing more of food items push up our headline inflation. Then you now see the impact of like core and then rural inflation and urban inflation. But basically, the three key indicators or sub-indices rather to look out for in the inflation numbers is the month-on-month inflation, because that really tells us what's happening today compared to what has happened a month ago. That can truly help us see the impact of the fuel subsidy removal, to see the impact of the electricity tariff changes, to see the real impact of food prices, how that has also evolved within the past month. So those are the things to just look out for.
All right, and needless to say, the commodity prices will be up, I'm sure.
Yes. So we're seeing, like I said, all of the structural issues plus the planting season and the effect of like transportation costs and distribution costs and all of that just definitely.
And as you noted, that issue of security affecting farmers and production is still there.
Yes, it's still very much there.
We hope the president will turn his eyes there. We know we have new service chiefs and all of that, but we need for them to get working for us to eat.
Yeah, fingers crossed on that. We just hope that happens, because insecurity has really become a major plague.
Yeah, and it's looking sometimes as if it's a norm. We've come to accept it. Some farmers. I remember I went to Mile 12, to do a bit of report, and I met some people there who are now trading food stuff, and they used to be farmers in the north, but because of the insecurity, they've taken themselves away from the farming area and just waiting. Well, anybody who can afford to go into the farm, I'll just buy it off you and, of course, add some money and sell back here in Lagos. Those are the people who are supposed to be building or producing these crops that we're supposed to consume here, and they're back here just trading because of the insecurity.
Yeah, even larger farm owners are investing in like CCTV cameras for their farms, but it's more difficult to even get workers to come to the farm. Exactly. Than even, mounting the CCTV.
Mounting the CCTV. When people mount the CCTV, even those in the urban areas, how much power, how much internet do you have to run some of this infrastructure for you to talk about the rural areas? So a whole lot. The president's plate, not plate, his tray is full.
Yes, you're very right about that.
Yeah. Thank you so much, Nimibi Oluwole, Senior Analyst with Financial Derivatives Company, for your time this morning. Really appreciate it.
Thank you.
Let's take a breather. When we come back, still staying on the issue of capital importation and how we expect it to affect all the markets and investors, even in the country. That'll be in a couple of minutes. So stay with us here on Business Morning. You're welcome back. Still here on Business Morning and still on that capital importation numbers. That brought smiles to our faces yesterday. Now, to talk more on that is Mr. Ayode Jebo, the Managing Director of Optimus by AfriInvest, joins us virtually now to see some of the expectations from this good. Mr. Ayode, good morning, and thank you so much for your time.
Good morning. Good morning, and thanks for having me.
So I'm sure you've seen the numbers. Year on year is down, but I mean, we can live with that. I believe the more realistic one would be quarter on quarter, which we see is up. And of course, the one on equities, which for the first quarter shows about 4,400% surge. But my last guest just talked about the danger of being too excited about this since it's portfolio investment and could burst at any time.
Okay, thanks. Looking at the data, yes, rightly, it's lower on a year-on-year basis. For the quarter, we're only able to bring in capital importation about 1.1 trillion from 1.5 trillion last year. But when we look at it based on last quarter, it's higher than last quarter. But the interesting thing about this data is that portfolio investment accounts for about 58% of the total capital importation. And drilling further shows that equities increased on a quarter-on-quarter basis by about 4,400% year-on-year basis. On a quarter-on-quarter basis, and on a year-on-year basis, about 500%. So that shows that we, ahead of even the election, some of the foreign investors might have been making a call on the capital, that's on the stock market, which we can see that in the last 1 or 2 months, we've seen that appreciation in prices. In significant appreciation in prices, year to date is about, I think, 21% overall market, and banking sector, oil and gas, they are above like 60% return year to date. So what this, yes, we can say this, we call foreign portfolio investment hot money. It means they are there, they come in within a short while when there's volatility or there are major crises in the developed climes, they take the money. But they also provide liquidity. So what you would see, it's like you figure it out like the banking system, such that if you continue to provide confidence, you'll see people coming in and coming out, which provides the available liquidity for that bank. So using this as juxtaposing this with the capital importation. So for the FPI, yes, this is hot money. It's easy to be reversed. But if we continue to provide that confidence, I can only just imagine what would record in Q2, given what is also happening in the equities market. So you look at the total amount, about over $600 million were invested in equities last quarter. So that's the total portfolio investment, and equities was about $222 million. That's very significant. And one thing that we would also see now that is instructive is that with the adjustments in dollars, so for a potential investor as at April that is bringing in $10 million to Nigeria would have gotten about 4.4 billion naira. But with this devaluation that we have seen, it means that they have capacity to even invest more. Bringing in $10 million now will give you naira of close to about 8 billion naira. This is also one of the main reasons why we are seeing that inflow in the equities market, because based on valuation in dollar terms, our stocks are cheaper now to them in dollar terms.
So at least, if for nothing, counting one benefits from that devaluation of the naira, this will be it. But I mean, you said some things that are really important, which is we all know this is hot money. It can come in and go out. And one way of retaining and even improving the confidence of investors to change the tide would be, to win their confidence more. But how exactly? What steps should the government be taking at this time to win more confidence and turn this hot money into a more stable one?
Okay, thank you. So if we are looking for more stable investment, that would speak to FDI. and we got just a minute about $47 million, which would be like all-time high, which is very low. That's the one that leads to development, long-term, create stability. So what we need to do is provide more confidence. You spoke about insecurity earlier. There's a need for us to work on that. Those are like the quick wins. If you can do that, there will be confidence for the foreign investors to set up factories in Nigeria rather than setting it up in neighboring countries, because the demand is here. So if we're able to work on that and see more partnership between the private sector and the public sector, that will attract foreign direct investment. We've gotten as high as $4 billion in foreign direct investments if we check the past data. So what we're just seeing now is just a trickles. And you look at the equity part of the foreign direct investments, it's majorly equity. People are not looking at other forms of people investing in those companies in the long time. So it's not actually for expansion that we're seeing. So people coming in and trying to maybe buy a particular holdings in these companies. So there's a need for us to provide that enabling environment. It cannot be overemphasized. That is what will attract investment. There's no sentiment about investment. They are there for business. But you have to provide your security, you have to provide your power. All these things accumulate such that when you look at the cost of those products, they will be significantly higher, such that their margin would be low compared to setting up in other countries. So these are the things that I think the government also needs to focus more on. And once we have that, we'll begin to see more direct investment that will create stability for the economy, have more impact in the economy rather than having just portfolio investments.
Yeah, but we shouldn't forget our local investors. After all, the local investors held forth before the foreign investors thought this was a good destination. Maybe they saw the devaluation of the naira and some other factors. So since now the naira has been devalued, so our stocks are cheaper for the foreigners and all of that, is there any way to also encourage more of local investment?
Okay, thank you. One advantage of even devaluation, where you see in developed climes, they deliberately devalue to make their goods cheaper. So now what we can see now is that if we make our goods cheaper, then it means that we should be able to export more. There will be more demand. If they were supposed to demand for two quantity of a particular item before, it means that with the devaluation, they can demand for 4. So it is, how do we now channel to increase our exports? Are we taking care of the bottlenecks around, or the processes, simplifying it, of exporting in Nigeria? Because with the devaluation, it also puts us at an advantage over other countries.
Hello, Mr. Ibo.
Yes, can you hear me?
Okay. Yeah, I thought we lost you for a bit. So it puts us as an advantage, but the president seems very passionate, about making changes. So we've seen tax reforms, we've seen the executive order, we've seen special advisors on revenue and all of that. What do you think are a few of the steps, just in conclusion of this conversation, that he should be taking now for us to sustain this positive sentiment and even improve on it, talking about both the foreign and the local investors?
Okay, thank you. I think the next step, something that would be very impactful that we would see again, is releasing the list of ministers. That is very important. And the quality of the ministers would also make a very strong statement to both local and foreign investors. So once we also have that, with the quality of them, it would also help that we are sure that simultaneously things will be happening across different ministries, and we'll begin to see that results, because we may lose this gain if, depending on the action that is taken now, we can easily lose some of the gains that we were expecting, because some of these actions are currently causing pains. It is what we now do after that would help reduce the pains. Fuel subsidy is causing serious pain. Exchange rate devaluation is causing serious pain. What do we now do to see how we can reduce the cost and improve the standard of living of Nigeria? It is based on some of these policies that will encourage setting up of factories, attracting direct investment into the country that would help improve the standard of living, creating more jobs and reducing insecurity.
Thank you so much for your time this morning. Mr. Ayode Jebo is the Managing Director of Optimus by Afri Invest.
Always my pleasure. Thanks for having me.
And talking about those capital importation, which we see as such, one of them obviously, or a major part, went to the market. And there you have it right there. Yesterday's market rallied and went from 63,000 points to 64,603.69, and that's up almost 2.5%. Not a usual picture, but I guess we should get used to it for now. And at 35 trillion. So I'm going to be talking to someone whom we have now nicknamed the 65,000 man, because he predicted the market would surge this much and even surpass it and hit 65,000. So it will be interesting for him to tell us when we're going to get 65. Perhaps it's today, because if we did 2.48 yesterday and hit 64,600, we might just be able to close today at 65,000. Gladly, I'll be bringing that report later on the news at 10, so you might want to listen to it and get the details if we will hit that 65 today. But let's look at the stocks that made it. I mean, everybody's doing so well. Can you imagine volume going up more than 300% in one trading session? It can only happen in a market as this, but I don't want to get ahead of myself. I've been warned that this is all hot money, and we hope it doesn't go away soon. We hope it turns to a more permanent money. But I mean, this is what we have to work with for now. Value yesterday was up 250%. Imagine that, at 22.03%. And deals that would normally be maybe 4,000, 5,000, I was up almost 40% at 14,584. Those are the deals that happened in the market on Monday alone. Well, we're on a surge. I think Will called it Tinubu. So it's still a Tinubu market going on there. Looking at the sectors, everybody is doing well. Everybody is looking green, even though we do not have double digits gains. But banking was up 1.73%. Consumer goods, 5.13%. Industrial goods, 2.22%. Insurance that hardly moves. I mean, I saw some stocks yesterday that are hardly investors' favorite, but even they got some attention, you understand. And then you have oil and gas, 2.61%. Well, let's see if we're going to hit the 65,000 index point at the close of trade today. Mr. Abdulrasheed Momo joins us now. Mr. Momo, good morning. Well, we now call you here within the business desk on Channels TV. We call you the 65,000 man. So are we hitting that 65,000 today?
Oh, well, let's wait. So far, I think we are starting trading late. For now, we've not been able to log in, but I think it's been sorted out by the exchange engineers. But what the most interesting thing is, what I'm just looking at is, will market make history today? If it's not today, if it's going to be tomorrow. My main concern is that all-time high of 66,371. That's all I'm interested in. I just want to see if the index is going to break that all-time high.
And you think we will do it this week?
Definitely this week. All things being equal, definitely this week.
Wow, okay. But we see even stocks that hardly get attention. I mean, look at insurance here. We know it's one of those not so attractive, but it's up 4.18%. Banking. So which of them do you think, which of the sectors do you think will push this and make this history?
Well, we always look at the banking sector in terms of volume. First, let me go back to history. You see, when you go back to history, I'm talking about the Nigerian market generally, before we had the bubble, you see, in a bull market, number one, everybody makes money. Number two, every stock goes up. Even stocks that were under lock and key those years actually went up. So at this period in time, I cannot say why is this sector going up or not the other sector. You can see a lot of stocks that have moved from 20 kobo and they've made over 1,000 or more than 1,000% this year. You know, if you start listing them from FTN, Cocoa, Chi, most of the stocks are about 20 kobo, Japan from last year. So a lot of them. Some investors were actually going for penny stocks. The penny stocks actually give you huge returns, but there are higher risk in terms of those kind of trends in case there's a bust on the bubble. But if you look at the banking sector as we speak, even at these current prices, if you look at in terms of dividend yield, they are still within about, let's say, 8 to 9%, which is still okay. Then, if you now compare the index as at now and then in 2008, most of the stocks, especially the banking sector, some of them, apart from the Stanbic, most of the stocks like Access, Zenith, UBA, they are not First Bank. They are not even close to what they were in 2008. So, as I said, history is repeating itself, and the only thing I told my followers is, please call me when the market hits 66,371.
Okay, all right. We'll follow up too, and I'll call you once I see it, if I see it before you. Thank you so much, Mr. Abdul-Rashid Momo, Executive Director, Operations of TRW Stockbrokers. Thank you for your time this morning.
Thank you very much.
Let's go to London now, where Juliana is standing by. Juliana, good morning. We see UK unemployment increasing. I think it's past 4%. While wages is also increasing, 7.3% increase on wages. One would have thought that increasing wages will attract more employment.
You're absolutely right. Good morning, Innie. We have had data this morning from the Office of National Statistics showing that unemployment in the UK in the 3 months to May rose to 4%. This is from 3.8% in the previous 3 months. And I think if you kind of look at that figure internationally, it is pretty low. We are seeing that historic numbers of people are employed in the UK, but there are still record number of vacancies. I believe there are over 1 million vacancies. We still have a significant issue in this country of people suffering with long COVID sickness. And because of the backlog that we've been witnessing and experiencing in the NHS, it's really difficult for people to get seen by doctors so that they can return to work. So for some people, they would look at that data and think, okay, the UK is pretty much in a good place, but clearly we're not. Jeremy Hunt, the Chancellor of the Exchequer, he was speaking at Mansion House yesterday, and he reiterated the government's stance of wanting to have a high wage, high growth, low inflation economy, and we are just not there yet. As you were saying, within the data released this morning by the ONS, we also looked at wages. Wages grew about 7.3% in that same period. Again, that could be seen on one hand as being quite great. But when you look at CPI, which is currently running at 8.7%, even though people are getting more money because of the cost of living, it's not keeping up with record inflation. And the issue with offering people more money is that it pushes up inflation. So the government and the Treasury have got themselves in a little bit of a headache. The fact remains that Britain is the only G7 economy that has higher unemployment post-pandemic than it did before COVID-19. And I think the government have got to find some strategies to get people back into work so the economy can start ticking again. I think one thing the Chancellor did mention yesterday evening is that they do have some concessions coming in place. Like, for example, next year, there is going to be so much more money offered to young parents who've just given birth, want to get back into the office, find find it difficult to pay for childcare. I believe some sort of childcare maintenance fees are going to be coming into place, but that's next year when we are going into an election. So I think the government are going to have to get round the cabinet table and find a solution so that more people in the UK can start working, because clearly it is a great time to look for a job here.
Yes, it is, Juliana. And, well, the government, they asked for the job. We gave them the job. It's their job. They should get the solution. All right, Juliana. Well, we have that thing about the migration bill, some changes. But Ladi will speak to you on that during Business Incorporated. Thank you for your time this morning. All right, let's have Ladi come in now to talk about the crypto space. Ladi, so you have a conversation waiting for you and Juliana.
Yeah, exactly.
The migration bill.
Yeah, we'll definitely drill down on that later. But
right for now, you have your greed.
This is greed.
Oh, no wonder I saw your steps. Your steps were a bit different this morning.
Greedy steps, right?
Greedy steps, yes.
Exactly. 57 points we're seeing for the Fear Greed Index for the market this morning. Let's look at the charts. Let's see what the charts is saying. The legendary maker of the Bollinger Band there, John Bollinger, says he's seeing a squeeze right there for Bitcoin. And when you see a squeeze right now on this Bollinger Band indicator, it shows that there's a big move coming, for Bitcoin, but now it's finding what direction that's going to be. Is it up or down? But it's going to be a big move, whichever way it goes. And it seems like we're seeing a BART head there trying to form, talking about Bart Simpson there. That's also an indicator in most of these charts there. If that forms, then that's down if we see that actually forming. Let's look at the top cryptocurrencies we track this morning. We see Bitcoin there holding on, $30,518, up 1.37% this morning. We've seen Ethereum also up. It's all green, with BNB the biggest mover up 5.90%. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide. Good morning.
Yeah, good morning, Ladi. Thanks for having me.
Great to have you, Olumide. So we saw that report from CoinGecko showing that Nigeria still accounts for about 67% in Africa, talking about interest in cryptocurrencies. And Nigeria is really making profit at this point.
Yeah, I think that really highlights the fact that Nigeria happens to be the biggest market in the continent, and also they play a systemic role in the crypto market on the global scale. That's not surprising. If you look at the fact that in spite of the devaluation or the unification of the Naira, you could still see an uptick interest in staple coins across Nigerian residents. And that's why we've seen the price against the US dollar stable and relatively aligned with what we're seeing in the parallel, and quite higher on the investors and exporters window. But going into the technicals, just like you rightly said on the chart, if you look at the interest of Bitcoin wallets, it's at all-time high. The amount of holders with at least one Bitcoin is over 1 million, and that has really been escalating since the month of May. So pretty much it tells you that some retails and institutional investors are positioning for the ETF spot approval, definitely most likely going to push Bitcoin upward, as Standard Chartered really upgraded their forecast for this year, that Bitcoin might hit $50,000 and double that price in 2024. So, yeah, Ladi, I think the bulls wagon are still with Bitcoin on a relatively longer note, but this week will be a bit tight because we're seeing the CPI and job claims reports. So that really might affect Bitcoin in the short term.
Right. All eyes on CPI. That's US CPI for Wednesday. We'll see how that moves the market. Thank you so much. Olumide Additional, financial market analyst.
Thanks for having me.
All right. So, the Bollinger Band there shows that there's a big squeeze we're seeing on the price of Bitcoin there, and that's on the daily chart right there. So now it's what direction is it going to go? It's a big move, but we don't know what direction.
Yeah, but certainly that move has to be made.
Yeah, the move will be made.
You can't stay uncertain.
Maybe I'll look at your crystal ball later and see.
No, don't use mine. It's not safe.
It's not safe. All right.
All right, Ladi, see you at 1:30.
See you.
All right, so that's it on the program. The second 55 minutes for the week. We have 3 more to go, and we promise to make the very best of it. That's why we'll be back here tomorrow, God's grace, for the midweek edition of Business Morning with packed conversations that will help you make a good decision. For now, I'm Minnie John McQuine. Enjoy the rest of your day. Make some money. And we'll see you again tomorrow. Bye.